Joining me now for a deeper dive into the markets is Craig Pheiffer from Sasfin Wealth. Craig, thanks so much for your time this afternoon.
Good afternoon.
Thanks again for joining us, Craig. So trade really choppy with investors digesting the Fed's decision to hold rates again. That move expected, but we are starting to see, President Trump's policies working their way into, policymakers' commentary. Powell saying they've lowered growth forecasts for the year and pegging in higher inflation. Just your analysis on that move and the commentary that's come out of the meeting.
Yes, I think the expectation for lower growth was certainly in the markets, even potentially expecting a first quarter contraction in the US GDP. But pulling it back from around 2.1% was what they were looking for in December to around 1.7, staying around 1.8 next year and the year thereafter, and pretty much that being the long-term rate as well. So, potentially just pulling back maybe towards potential growth rate. But I think the market had been anticipating that already. I think that's why the market, was still positive last night, the S&P. And also, I think on the interest rate front, just leaving that expectations unchanged for two rate cuts this year. At least, he didn't kind of pull back on them, or the members that contributed to the dot plot hadn't revised their view too much. So at least two rate cuts, even two the next year, still on the cards, let's say. That's what the thinking is from the Fed members, from inside the chambers. So I think the market was starting to anticipate maybe three cuts this year. But all in all, when you come back to it, still some easier monetary policy this year, and the economy not collapsing in a heap. So that was, I think, a positive from Powell last night.
And just looking at, the commentary out of those meetings, out from the Fed, out from the People's Bank of China as well, do you think that will then influence the SARB's decision come 3 o'clock today? Because we have been seeing a whole lot of these central banks stand pat on rates this week. Or will you perhaps maybe see the Fed a little more dovish, considering that, the indicators at home are positive, inflation is lower, the rand is quite strong?
I think there's a lot of uncertainty in the air at the moment. And, if you put yourself in the central banker's shoes, or even ourselves as investment managers, when we're trying to manage portfolios and funds and trying to make sense of the world at the moment, the economics, the politics, and all of that, throw all of that into the mix, there's a lot of uncertainty. And it's very difficult to make long-term strategic or long-term decisions, even medium-term decisions on what's going on at the moment. So I think the central bankers sitting there will say, look, we don't know how this is all going to play out. On the 2nd of April, we'll see exactly what tariffs have actually come to bear. We've got some comfort. The economy is still okay. It's still in good shape. Let's just wait and see. And I think from our SARB's point of view as well, inflation looks to be okay still. The inflation expectation survey we got earlier this week was, better for this year, a little weaker for the longer term, but it's still there around the midpoint of the target range. So I think our own governor and his MPC team can also just wait and see how things play out, on the global front and then also on the local front.
Yeah, and sticking with news out from here at home, the JSE also holding up well. I mean, the All Share hit a record high yesterday, crossing the 90,000 mark. And as I'm checking right now, it is quite lower, but I still see that it's still above that 90,000 mark. And this was mainly influenced by the Industrial 25, as we saw Naspers and Prosus benefit from gains in Tencent. But today we saw some price taking in the Asian tech sector. Is that why industrials are in the red this afternoon?
Yeah, I think Naspers and Prosus are down around 4%. That's on the back of the weaker Tencent after their numbers yesterday. But still, I think a positive story. The shares, Tencent has recovered quite well. The outlook still looks quite positive. So maybe just a light bit of profit taking. I think the bigger picture is still intact there. But our local market essentially been driven this year by the commodities, the gold in particular, where you've seen 20, 30, 40% gains. You've also seen strong runs in the likes of Anheuser-Busch, British American Tobacco's up 10%, Richemont up 18, 19%. So those have been the big drivers so far this year. I think the more local orientated stocks, the retail counters, the banks have largely been on the back foot. So it's largely been a commodity story. And as gold picks up, that's a good story for South Africa. It will certainly help our revenues, our government or our fiscus tax revenues there. And we need as much as we can get on that front.
And before we get your stock pick, Craig, Momentum Metropolitan out with numbers today, delivering earnings growth of over 50%, and the group bumping up the interim payout by 42%. Markets really seem to be happy with those numbers. The last time I checked, the share price was up over 5%.
Yes, a good set of numbers, largely flagged in the trading updates towards the end of February. The market reacted very positively after the trading update, but then fell back closer to 28 Rand. But yes, with the actual results coming out today, the market pretty upbeat. All the business units, seem to be doing well. Still, top line just shows you in the local economy, it's a bit tough to grow your top line when the economy itself isn't growing. But a very good set of numbers. I think the market likes the additional share buybacks, and we're back up above 31 Rand again. So a good result all round.
Let's just squeeze one more company in. Investec forecasting profit growth of up to 12%. The firm also said its balance sheet is looking strong. Just your analysis on that update, Craig.
Yes, just an update before the books close and they can't talk to us anymore about their financials. The market's interpreting them a little bit negatively today. The share's down 2 to 3%, the local and the PLC. Maybe just at the headline or the adjusted headline level, some of those numbers potentially being negative on the growth side. Overall, I think the company is as a banking group, international banking group, still well placed, but maybe just a bit soft on those adjusted headline numbers.
All right, let's just hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
This business is growing tremendously, both in the US and internationally, which is about more than a third of their business now. We're looking at high teens to early 20s growth, and it's trading in the mid-teens on a forward multiple basis. To me, this is a great business. It's had a big sell-off from its recent highs of nearly 50%. I think you're starting to see a nice entry level here. So that's my pick.
I just think it's cheap. I just think that there's been a massive sell-off in the Mag 7. Just be patient. I think you're going to see a turnaround. I'm a great believer that all the uncertainty around Trump, will reverse. That's why I'm so reluctant to make any major changes to a portfolio, because he's so unpredictable. And I think we're already seeing the backlash against so many of his policies, including the Chief Justice, who just came and rebuked him over, wanting to impeach a judge. So I think Mr. Musk, Mr. Trump, all of those will eventually go to the headmaster's office, get a caning, and then start behaving properly. And the thing is that, it can turn around. We're not facing this is a self-imposed crisis in the US. This is not COVID. This is not the great financial crisis. So I think this can reverse. So I think those Mag 7 will start, not Mag. Hey, when I say Mag 7, ignore Tesla.
Mag
That's
6.
out the equation.
Mag 6.
Mag 6.
Yeah.
But put in Broadcom instead.
So the Signia ETF that focuses on those tech counters with a focus on AI, as well as Deckers Outdoor. Just your analysis on those counters, Craig.
Yes, well, I'm certainly not going to argue with David over the over the Signia ETF. It does give you, I think, the top six being the Magnificent Six, as you said, apart from Tesla, make up about 60% of that ETF. So if you want exposure to that market or that sector, this is an opportune time, given that it has had, a fair bit of a pullback. Some of those valuations of those individual counters are looking good, but it is quite a focused ETF. So if you want to play that, without taking on individual names, that's a good way to go about it. And then I think on Deca Outdoor, also not a stock I've looked at previously, so analyzing it, just having a quick look at it. Good growth numbers, good growth expected. As Grant said, there has been a bit of a pullback in the price. So it does look like one of those companies that has a good track record, growing earnings, and the outlook looks quite positive. So I can't argue with any of those two.
All right, before I let you go, what are you hanging your hat on this afternoon? What's your stock pick?
I'm hanging my hat and my lab coat on the Thermo Fisher Scientific. It's a company which we call in the sort of the picks and shovels business of pharmacare. So they supply, I'm going to simplify it a bit, but the test tubes and the Bunsen burners to those pharma companies as they develop drugs. So the analytical instruments, all of those life sciences products and solutions that help companies develop new drugs. So there's no reliance on the company itself, the hit and miss of new drugs. They're just supplying, as I said, all of that equipment, all of the facilities to actually get those things done. So like the company, and it's a good way to play that pharma space.
So Thermo Fisher, one to look out for. Craig, thanks so much for your time and just sharing your analysis of trade at midday. That was Craig Pheiffer from Sasfin Wealth.